back. You're watching The Money Show, and it's time to answer your portfolio queries. Harshvardhan Gupta is there with us on this very special edition of Women's Wednesday. Harsh, hi, good evening, and welcome to the show. Harsh, our first viewer is also connected on the phone line. Rinku wants to ask a question. Rinku, hi, good evening. You're calling from?
I'm calling from Gurgaon.
Gurgaon. Okay, Rinku. Is it raining there today?
Yeah, Monsoon is quite pleasure actually.
Oh, that's nice. I hope you're safe. So, what was your question, Rinku?
Yeah, so currently we are investing 36,000 in four funds, and now we want to add 20 to 25,000 more per month.
Okay.
So my query is, which index fund or multi-cap fund I can add to my portfolio?
Okay, perfect. I will just read out your funds, Rinku. You might just want to cross-check. MOSL Mid Cap, 10,000 rupees. Quant Small Cap, 4,000. Parag Parikh Flexi Cap, 10,000. And SBI Contra, 12,000. Is that right?
Yeah.
And you want to invest for 15 years,
This call is now
Rinku?
being recorded.
Sorry?
Rinku, you want to invest for 15 years?
Yeah.
Okay, and you
15
want... Okay. You are confused between Nifty index and momentum funds. Is that right? You want to add that also?
Yeah.
Okay. What is the corpus that you're looking at? How much do you want to accumulate via these investments?
Around 4 crore after 3 to 4 crore after 15 years.
Okay. I will take the upper band. Let's take it 4. Okay?
Okay.
All right, Rinku. So let's help you with this investment. Harsh, over to you. First, what is right in her planning? Let's just start with that.
So, Kavita, the good part is that she has been making certain investments for a considerable amount of time. She has a long-term horizon, which is 15 years. The portfolio that she's created is a good mix of large, mid, etc. So all that part is good. Now, coming to her query, I mean, she very specifically said that she wants to increase her investments by 20,000 rupees per month. And she has shortlisted either a Nifty 50 index fund or a Nifty Next 50. And interestingly, she's also looked at a Nifty 500 momentum quality. So she's getting into the factor-based funds and inquiring about that as well. So let's first take her portfolio, existing portfolio. Now she has invested in Parag Parikh Flexi Cap. So well, in that context, she's the Parag Parikh Flexi Cap currently has an allocation which is majorly into large caps. So while she has one scheme which has an allocation into large caps, there is no need for her to add a Nifty 50 or a Nifty Next 50 because that is also a large cap fund. So the first thing, Rinku, is that you don't need to consider a Nifty 50 in case since you already have Parag Parikh Flexi Cap in your portfolio. With regards to mid cap, with regards to a small cap and a contra fund in your portfolio, I think your existing portfolio is just about fine. Now, interestingly, what you've mentioned is that the fresh 20,000 that you want to invest, you also considering a factor-based fund, and you've identified the Nifty 500 Momentum Quality Index Fund. So I guess just understand it's a great strategy to have. Just that if you're adding any factor-based fund in your portfolio, especially the momentum, which includes the momentum factor, well, you must be ready for higher volatility in your portfolio. So if you compare a momentum strategy to a traditional index fund, you would find the volatility in momentum-based funds to be higher than what it is there in Nifty 50. So with that consideration, you may most certainly consider adding momentum quality, a dual factor fund in your portfolio. Now, how this will work? So this is basically a Nifty 500 multi-cap strategy. Out of the Nifty 500, they will select 50 companies. The index picks up 50 companies out of 500 based on their momentum and quality score, which is, as a preset matrix by the stock exchanges. So the universe of investing will be 500 companies, large, mid, and small. It covers the entire segment. And from that, they will pick 50 companies based on the momentum and quality score. So you will have good companies in terms of quality factor, and you'll have the companies which have high momentum score, and that will form a part of your portfolio. So you can most certainly consider that to add into your portfolio in case you're comfortable with the volatility. The scheme that you can pick is Edelweiss has one scheme in this category, which is Edelweiss Nifty 500 Multi-Cap Momentum Quality 50 Index Fund. So that's the scheme that you can consider for this strategy that you want to include in your portfolio.
Harsh, one question. She already has a strong core portfolio. Would you like to believe that? I mean, obviously, after adding the recommendations from you, does she really need a momentum fund? Or just because she's asked, we have to recommend, and that right now looks like a good fit for a satellite portfolio? Is that the case?
So see, Kavita, factor-based funds or quant funds have a place in the portfolio if the investor has the appetite. So let's understand how a factor-based fund is placed in the portfolio. So one end you will have passive funds, which are pure passive funds like an index fund, Nifty 50, Nifty Mid Cap 150 Index Fund, etc. So they just replicate the mirror the index as it is. So that's on one end of the spectrum. The other end of the spectrum is when you have actively managed funds. So these are schemes which the portfolio is created and constructed based on research of the fund manager, and that's exactly how they feel like doing. There is no compulsion to use index-based companies or etc. Now, factor-based funds come in right in middle of the two. So while the universe of investing will be the index stocks, right? They will put a factor and shortlist a few companies out of that basket. So let me give you an example of a mid cap index fund, for example. So Nifty Mid Cap 150 Index Fund, what this does is it simply replicates the 150 companies in the same proportion as they are a part of the traditional index. So you'll have 150 companies in it, and the weightage also will be exactly how it is there in the index. Then comes the factor-based index. So now there is a scheme that says Nifty Mid Cap 150 Index Momentum 50 Index Fund. So what it does is it takes the same companies which are part of the 150 index, but it picks up 50 companies out of that based on the momentum score. So you as an investor, if you believe that I want to invest in the mid cap segment, I want to but invest into only those companies which are high on momentum, which means I don't mind the additional volatility, but I want to beat the traditional index. So I want to beat the Nifty Mid Cap 150 index. So I'm putting a momentum score and picking 50 companies out of that in an hope that I will get more returns than what the traditional index will give. So this is right in between a traditional passive fund and active fund. You have a factor-based index fund in between. So it is going to be more volatile than the traditional index. At the same time, you're trying to generate additional alpha over the traditional index. So there is a nice spot for this product in the portfolio because she is specifically asked for it. I'm assuming she understands the volatility and the functioning of such factor funds. If she does understand, there is scope for it to be added into a portfolio. Hence the
We can
suggestion.
ask her right away. She's there on the phone line with us. Rinku, did you hear the review that Harsh gave?
Yeah.
Anything, anything you want to ask?
Just if I go with that Nifty 500 momentum quality fund, which actually.
Edelweiss. I think you're asking the AMC's name. Which AMC? Which fund house?
Yeah.
Okay.
Yeah.
Harsh, I think you recommended Edelweiss Nifty 500 Momentum Quality 50.
Yes, that's what I have suggested. So it's the Edelweiss
That's
Nifty
the one that's
500.
flashing on the screen. Rinku, you can note it down. This is the one that's flashing on the screen. Edelweiss Nifty 500 Momentum Quality 50. All right. Thank you so much, Rinku, for sending us your question. We move on, Harsh, and we take Rohini Ayer's question. She says she is retired banker investing for wealth creation, multiple ELSs and equity funds, and wants to know if any changes needs to be done in the portfolio. She wants to reduce overlap in her investments. She's got ABSL ELSs, Canara Robeco ELSs, Axis ELSs, Mira Asset Large and Mid Cap, and Parag Parikh Flexi Cap. Okay, she's got a very specific profile in terms of her risk assessment, if that's what you can start with if you want to. And we are not sure if she's in the old tax regime still, because if that's the case, then maybe LSS is a good option, but so many, I'm not sure.
Yeah, so Kavita, if you scan through her query, we can divide it into three parts. There is one section which she's been investing into the ELSS funds because somewhere in her query she's mentioned that she is in the old tax regime. So she needs the ELSS investments to get the tax rebates. So, and the other is then, other than the ELSS, she also has an active SIP going on, SIPs which are going on in two other schemes, which is Mirai Large and Mid Cap and Parag Parikh Flexi Cap. Then the third portion of her portfolio is there are about two schemes in her portfolio in which she has stopped her existing SIP. So they continue to be there in her portfolio, but there is no active SIP. So let's break this out into three parts and answer it. One is because she needs ELSS as she mentioned in her portfolio, she does not need three schemes. So to avoid overlap and duplication, she can merely close, stop SIPs into two schemes and just do the entire SIP into only one scheme. So she can retain the Canada Robeco ELSS fund. Other than that, she can stop her SIPs, though she will not be able to withdraw money that is already invested if it's within the lock-in period of 3 years. But she can stop fresh investment into it and just keep it into one scheme. That should be good enough. The live SIPs into non-ELSS schemes, which is Mirai Large and Mid Cap and Parag Parikh Flexi Cap, she can most certainly continue with that. Now, the last portion of her portfolio in which she has been investing, she had invested earlier, but it continues to be a part of her portfolio, which is Canara Large Cap and Mirai Large Cap. Though, of course, both being from the large cap category, there would be overlap and duplication. But as of now, considering that she's retired and she's unlikely to make any fresh investment in it, she can just simply continue for now. However, if in future she wants to make any fresh investments in the form of lump sum, then she may need to assess whether she needs to be in a large cap, she needs to move to a hybrid fund or a conservative hybrid or a dynamic asset allocation. We have to figure out all of that bit at that point in time. And at that time, she may think of doing something with it. Otherwise, for now, just leave it as it is. And so the change is only one. Stop multiple SIPs into ELSS funds. Just take one scheme, which is Canara Robeco ELSS fund.
Okay, let's move on and let's take one last question. This is from Shibani Devi. And she wants to build 100 crores in 15 to 20 years and right mix of stocks and mutual funds. Current equity corpus is of almost 3.5 crores and wants to know if that goal is realistic. Well, kudos to you and hats off. Very inspired by looking at your question. 100 CR, that's definitely a very good aim, but we don't have your entire investor profile. You have 3.5 CR accumulated, but what's the age? And 15 to 20 years looks in a very long time. But as far as stocks are concerned, we have other shows at 11 o'clock every day. We have Buy Now, Sell Now. So maybe you want to send your entire stock list or portfolio over there and we can get a review by experts. But over here, mutual funds. Can she make 100 CRs by investing 3.5 CRs in mutual funds?
Oh, well, Kavita, yes, it is possible, of course. So there are two elements. One is that she already has a corpus of 3.5 crores. We don't know whether it is only in mutual funds or a combination of stocks and mutual funds. However, and she needs it after, say, about 20 years from now. So let's look at it in this manner that yes, it is possible. Of course, it is depending on how much you're going to further invest every month here on for the next 20 years. So I can give you that figure as well. But understand, if you have aggressive targets, then the only asset class that can help you achieve that target is equities. Either you do it directly into equities or you invest into equities via mutual funds. Now, when you invest into equities directly, I mean, there is no estimation of returns because, the stock that you invest in or the basket of stocks that you invest in could go either ways. It could like rise exponentially or fall exponentially. So the risk and element is dependent largely on which companies you're investing into. When you come into the arena of mutual funds, well, this basically the portfolios are comprised of multiple companies. So you have at least 30 to 40 companies.
Right.
So there an assumption would be about 12%. Now, if she's willing to invest about 6.25 lakhs additionally every month, in addition to what she already has, she could achieve her target of 100 crores.
But I would request Shibani to send across a question once again with all more details that might really help her achieve 100 CR. With that, it's a wrap. Thank you so much, Harsh, for being on the show today. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.